Okay, welcome to Stock Market Today. Today is Wednesday, May 15th. As you may have picked up, this is not Dan Russo speaking to you. Dan had a conflict for this morning, so you've got Nick Webb stepping in for Dan today. Hopefully I can live up to all that he does on a regular basis. So let's go straight to the market. Let's see what's going on. So decent day yesterday. The S&P 500 rebounded after, I don't even know how you say it, but Monday's drubbing. The small caps actually did even better than that. They were up almost 1.3437, something like that. So you take a look and you can kind of see that we've now got a pretty clear resistance and support level. The resistance sort of is sitting in there around 2,800. Support, resistance is at 2,950. Support is at 2,800. So between those, it's going to bounce around. Obviously, this is a challenging market because you can have all the technical expertise you want, but one tweet can absolutely destroy what's going on in the market. It's probably one of the more challenging markets we've faced in a long, long time. And it's something that we at Chaikin Analytics have taken a step back and sort of said, look, the forest for the trees. This is a relatively great environment for stocks right now. You've got low interest rates, growing economy, strong dollar. This is a market that should be going higher. So if you were to pull out all of the exogenous variables, the trade wars, the Iran, Saudi Arabia thing that's going on right now, if you pulled all that out, this would be a good market moving in the right direction. And so using these pullbacks, which clearly the market did yesterday, as a way to buy great stocks is not a bad strategy. And so that's kind of what we're counseling at Chaikin Analytics. You can see the institutions are following that. Money flow is still strong. That's a proxy for institutional interest. So down at the bottom of the chart where you see that big green mountain, the fact that that is positive and in the green, that tells you that institutions are buying and not selling right now. So they're seeing the same things we are. So we already talked about how the market bounced back. Didn't get all the way back from Monday, but did make some headway. All of the indexes are up. You can see S&P 500, the NASDAQ, small caps. So pretty much across the board, everybody was a winner. We still do see continued Iran, Saudi Arabia tensions are pushing up oil prices. And again, that's bounced up and down. Oil prices have been on a tear recently, but you only have to go back to Q4 where they absolutely cratered. And we haven't gotten back to the high of where the oil prices were in Q3. So, yes, they are going up, but they're not nearly as dramatic. The retail sector is definitely feeling the brunt of a China trade war. There was an interesting earnings release yesterday where Ralph Lauren announced pretty good earnings. Yeah, the revenues were down, but they're not doing as many sales. So the earnings, though, which I think people really fixate on, were very strong. And yet the market just absolutely punished Ralph Lauren. And the reason for it is they revealed how much they rely on China for their apparel. So this is definitely something that is impacting the retail market, the ag market, and a couple other sectors far more than any of the other ones. And obviously technology is the other sort of flashpoint. But retail still is not sort of bounced out of that. Looking at the futures market, and that's been bouncing around today. At one point it was up. Last time I looked at it before the show, it was pointing to a lower U.S. Open. So keep your eye on that. It's not dramatic either way. So looks like at least for the first time in a while, kind of a mild open. So our stock of the day today. Now, important to remember that this is not a recommendation. This is just something that our algorithm pulls out as a stock of interest, and they sort of rotate through. So we're taking a look today at LPL Financial Holdings. This is a stock that we're seeing as very bullish. You can see the reason for that is it's got very strong earnings. The financials are lined up for it. The technicals are strong, and experts as well are okay. So sort of everything in the right direction for LPL. And if you look at the chart at the right, just taking a little time to sort of diagnose this the way we do at Chaikin Analytics. Start at the top left corner, you can see it's very bullish. That's a great sign. That means that the Chaikin 20-factor model has rated this stock as something that should outperform the market in the next 1 to 6 months. You then go down to the bottom line, the ribbon, which shows you how that has been consistent really since January, with just a slight break in March, April. So we've been bullish on this stock for quite some time. And you can see LPL has rewarded our call on this. You then move up to relative strength, and you can see that it is outperforming the market. So that sort of checks 2 boxes. First, Chaikin likes it, and 2, the relative strength shows you that the market likes it as well. And then go up to Chaikin money flow, and that's also green, and that's sort of our proxy for institutional likes or dislike, and you can see that institutions now are liking LPL. So that's the 3rd box. That's a good sign. Sort of everything's going in the right direction for LPL. So that's how we read a chart here at Chaikin Analytics. Then we get into timing, and you can sort of see whether it's overbought, oversold. You can see right now it's looking a little bit on the overbought area. So it may be one that you want to watch for a while, and when it gets to a pullback or something that looks a little bit more auspicious in terms of a good entry point, that would be the time to get into it. So what's been going on in the sectors? Well, we talked about this. There's no question that technology, communication, discretionary, all of those are hammered by the trade war, and you can see that impact. Now, yesterday, most of those did rebound somewhat, but over the last 5 days, they're still down. So real estate surprisingly continues to do well, and utilities, not surprising. Again, these are sort of the defensive sectors, and they are outperforming the market in general, and are actually positive over the last 5 days, which is pretty special, given how far the market's gone down. Just taking a look to the right there, again, this is something that we pull out a different industry every day and take a look at. So innovative technology services, interesting industry. It's got a lot of fascinating names in it. By and large, we're not overwhelmingly bullish on this going forward, although in the past 6 months, it has outperformed the S&P 500 by a pretty significant margin. Not surprising. Again, these are innovative names. They're ones that are sort of pushing the envelope. Over the last 3 months, 4 months, those types of names have been rewarded in the market, but we're not sure that's going to continue. As a matter of fact, we think it won't. So let's take a look at one of those. Let's go to DocuSign. And again, you can sort of take a look. Now, DocuSign's interesting because we literally haven't had enough track record up until a few days ago to provide a Chaikin Power Gauge rating. But now that we do, it's come in as very bearish. And you can see it's been okay. It's had a decent run up this year. It's traded down over the last 2-3 weeks. Money flow's okay with it. Relative strength is good. But again, we're not liking some of the fundamentals. And so we think this is one to skip rather than get into. But again, you'd have to evaluate each stock with your own sort of investment metrics. So what happened yesterday on an individual stock level? So we had the top gainer was CenturyLink. They're still sort of basking in a good earnings report, and the natural follow through of that is that estimates have been increasing. Electronic Arts is also sort of in that same boat where they had a great earnings release a few days ago, and they're still sort of basking in that. General Electric, they announced that they had booked several power plant orders, which was great. They outperformed their competition, and so they got rewarded. Then the last two, AMD and WDC, those are pretty much rebounds from the trade wars that were going on, and so they got hit harder than most stocks, and they've rebounded today. We talked about, on the loser side, we talked about Ralph Lauren. Again, you can see that it got tainted with China. Xylem is the opposite of Electronic Arts. It had a bad earnings report, and it continues to sort of have negative estimate changes, and so 4 or 5 days out from the earnings report, it's still reeling from that. The only other one that's kind of interest is CVS, where they are going to get hauled up to Capitol Hill for some meetings all around their merger with Aetna. So probably not good news for them. No significant earnings surprises in the Russell 3000. Today, the big name to watch after market is Cisco. That's a bellwether in the technology and communications area, so it'll be interesting to see how they do. A couple of bonus charts that we always tend to throw in here. One is to take a look at growth versus value. As you can see, over the last couple of years, growth has been dramatically favored versus value, but in the last week and a half or so, that has turned around. So when you see the line begin to point downwards off the top chart, then that's beginning to move in the opposite direction. It's got a long way to go, but it does show you that in times of stress, people do go to value over growth. Not surprising, we've known that. The other thing is just a quick look and put long-term treasuries back into context. They're trading, back almost to the lows of 2018. So again, this is one of those underpinnings of the market. If you think about it, you've got decent earnings at least that were above expectations this quarter. You've got a solid economy that seems to be growing, and you've got an interest rate environment here that you can see is pretty benign. This is as good as it gets. So when all those conditions are in the market's favor, that tends to make the market go up. Now, obviously, the sort of exogenous variables that we've experienced recently, and in particular, it does seem like these trade war announcements, tweets, whatever you want to call them, have been really causing the market a lot of distress or a lot of euphoria. And sometimes you've got to just sort of take the big picture view and put the immediate trade war issues off to the side and look at the bigger picture, which is market should be pretty healthy right now with this kind of environment. So that was why I included this slide in here today. A lot of underpinning of what's going on in the market, and it does warrant a strong valuation. So, well, as we're coming up to the end of our session, I did want to urge anybody that has not yet taken advantage of PowerFeed to go ahead and sign up for that. Just go to www.chaikinanalytics.com/today. This is a free newsletter. It comes in the morning around 8:30, so it's there before we get going so that you can sort of follow along. It has a lot of the same displays that we use in this presentation. So again, it helps you follow along. And I believe tomorrow Dan Russo will be back, thank goodness. And it's been a pleasure and a lot of fun to do it today. So thanks everybody. I'll talk to you later.